Well, good afternoon and welcome back to the YouTube channel of Old Bloke Crypto on the 2nd of February 2024. And the first chart that we have here before you is a very good example of a ranging market. And as you can see, we've got the upper and lower bounds of the range. Here I shared this graphic earlier today on Twitter, and below another tweet there with some information. And as I said, I'm going to share this video today, and I'll come back to this more recent tweet as well shortly. But as you can see, we are in a range now. How can I establish that? As I've been talking about recently, the price has been respecting the 50 EMA, and this is on ETH and also on Bitcoin, but ETH is my main trading token. You can see it's respecting the 50 EMA on the daily, and then we've come up. Everyone's thinking, Yahoo, we're breaking out, and then it's come back down here, crossed below the 50 EMA, and then it's just dawdling around there. I posted earlier this week about the potential for a bull trap, for it to come across the 50 EMA and back down again, etc. And that has not played out. That has been invalidated. And as we can see here, that we have established that we're in a range. Now, most markets spend most of their time in a range. It takes time to establish a range, and this is what we've done here. And I'll explain as this video goes on, more importantly, as I was saying on Twitter today, how to profit from a range. And a range can be very profitable. You hear people saying things like choppy and asking you to get stopped out and so forth. That is true, but usually that's for people that don't know how to trade the range effectively. And I'll explain to you how it's done and how I've done it before and plan to continue to do it now and into the future. As I said, top of the range there, bottom of the range. So that's our support. You can see we've come up here and retreated from that local top and then punched through it. And then we started to bounce around here, or as some people say, chop. I don't prefer that term myself. We've come through again, and a lot of people, and can understand why, I've said, okay, just as we've come through here, bounced off this support, we've had this little bit of a range, and now we've gone through again, and off we go. This has turned out to be a trap, hasn't it? This has turned out to be a bull trap right here. It's a deviation, and we come back into the range now. But again, I'll describe how, with the strategy that I use, you can cater for these without getting stopped out. Okay, so let's go to the live charts. As you can see, I've still got these marked here. We're currently sitting at 2304, which is basically in between, directly in the middle of this range. So what do you do now? It's up to you what you do, because not financial advice, this video never is on any of the videos I produce. And by the way, please hit the like button, subscribe, and the notification bell, so that you're notified of future videos. Now, having that out the way, what I would do right now is do nothing. And you hear me say that often, quite often, the best thing to do is nothing. But then when the time comes to do something, often it can be very hectic and very frantic for some people. Anyway, I don't trade frantic. I trade data. I trade plan, and I execute that plan. So we're waiting now for this price action to come down to the bottom of the range and to bounce, or to come up to the top of the range and be rejected. That's what we're waiting for. So this price comes down to 21.31, which you can see here marked. And many other traders have approximately this range around the 21.30 mark. If it comes down to close to this range, even 21.40, I will then close out my short. I will then add to my long position. I will also place a hedging short position, a new one, which is my default position of 5 ETH. I always trade at 100 times leverage. As I've said to you before, not gambling, but a strategic move. I have the capital, I have the patience, I have the discipline to handle it if the price, for example, a black swan event came along. China invades Taiwan, market tanks, I won't get stopped out. Simple as that. I've got my hedge in place to take advantage of that. My long won't get stopped out. Similarly, I come up here, the price comes up here, I close out my high time frame long position. I place a new hedge of 5 ETH there. Price continues to go up, and I'll show you how to deal with that if and when the time comes. And it's not a deviation. and it just continues on to the upside, which could happen at any time. And that's called a trending price action. Now, eventually, we're going to trend either to the upside, or you can see this is a trend here, or we can trend to the downside. We'll go to our liquidation charts, and this is on the daily. This is one of the charts that I use, and these liquidation bubbles give you an exit trigger on your trades. And when you're coming and you're bouncing to the top of the range, and this is right a similar time frame to what we're looking at on the live charts, we see these triggers. These are these size 3 bubbles, and they trigger to close your long, and sure enough, price comes back into the range. I haven't had any downside triggers for a while to close my short. So expecting that to happen could happen on the weekend, and weekends are a funny time to trade. In Australia here, it's Friday afternoon. So we're coming into the weekend. Obviously, we've got one more US session to go. But I still keep an eye on price on the weekend, because I have seen big wicks happen on weekends, surprising. The market makers decide they've got nothing better to do and that they're going to stop a few people out, and they do. So you've got to pay attention. I tend not to trade unless there's something really crying out to be traded on the weekend. I just like to watch. But anyway, you need to be aware of that. So next liquidation chart. Now, this is ETH on the 1 day, and you see there's more liquidation to the downside. What I was just saying to you is that I won't be surprised if we come down here next and come down to this 21.31 down here. You come down here and take out this level along with this liquidity down here. So if we go down to 21.31, just as an experiment here, comparing the charts. And as I've said before, you never just use one indicator, one chart, etc. You're asking for trouble. Let's get down here to 21.31. Look at that. We're right down here, right down in the weeds. This is on the 1 day. All right. There'll be more liquidity down here when I go to the 7 day and the 30 day, but it just gives you an idea that we're right down the bottom of this range here. Let's have a look at that 7 day now. Okay. Still, look at this, 21, 28. There we go. We still haven't hit that mark of liquidity, but you can see that there is more liquidity to the downside on the 7 day than to the upside. Let's have a look at the 30 days again. Remember, I said to you, we haven't come down to this level for a while, and this one's got more liquidity to the upside, as you can see here when you sit back and take a look at that. So, which is good, which again indicates that the 1, the 7, and the 30 are different in their liquidity structure, which means, again, with this ranging market, you're being attracted to both sides, the top side and the bottom side. There's plenty of liquidity to be had across the board. Again, just reinforces the nature of this trading market and this ranging market, I should say. And as I've said, this can go on for some time. Ranging markets can go on for months. But for the patient, as I've described to you, there is opportunity. If the price, it could happen on the weekend, I'll just reinforce it, comes down here to this 21.30. If it gets anywhere near it, 21.40, etc., I'm not going to be pedantic about it. We get close to that, I'm going to close out my short. I'm going to place a 5 ETH short as a new hedge in case price continues to go down to take advantage of it. 5 ETH being my default position. If it comes up here to 23.90 or gets close to it, I'm going to close out my long position. I'm going to put a hedge of 5 ETH in there, like I said to you before, and ready in case we start to trend. I'm prepared for all eventualities. So that is what I'm going to do. What you do is up to you. I traded 100 times leverage. You might do 2.5 times leverage for half an ETH, for example. That is entirely up to you. You do you. You do what you're comfortable with, what you can sleep at night with comfortably without keeping one eye open and worried about where the price might go. So this is Old Bloke Crypto. This is the last video for the week, being Friday here in Australia. Have a great, safe trading weekend. Keep an eye on Twitter. I'll probably put the odd tweet on, and I hope you have a fantastic weekend. If we do hit these margins on ETH, similarly, you should have a profitable weekend. And there's other tokens out there, King Bitcoin, etc., which I won't go to now, and others are the blue chip. If you sit back, take a look at the high time frame, you will find this same pattern with a number of the blue chips, which you may also choose to take advantage of. Love to hear about it on Twitter. I have comments turned off on YouTube because it's full of bots. I'm not interested in playing that game, even more than Twitter has. But feel free to comment on my tweets and let me know how you go. Safe trading. Talk to you next week.